And now our currency of the week, pound dollar. You can see here Donald Trump and Nigel Farage, photo taken about a week ago in the golden elevator of the Trump Tower. Trump said, "Call me Mr. Brexit." And well, Brexit was a shocker. Trump was a shocker. Both are friends, and it went in the same direction. Trump even suggested that Nigel Farage should be the UK ambassador to the United States. The British Foreign Office replied with, "The position is not vacant." Anyway, our currency of the week. Let's focus a bit about the UK, because today we have the autumn statement, which we heard about because this is Chancellor of the Exchequer Philip Hammond, the Treasury Secretary, if you wish, in the United Kingdom. He said the United Kingdom economy, well, we know that it's doing better than expected. It did not collapse following Brexit. We'll have fresh GDP numbers on Friday. The weaker pound does help a bit in, well, not only pushing inflation higher, but also helping exports, and consumers continue buying. The future looks uncertain. This uncertainty did not manifest yet into any kind of economic slump, but perhaps we've reached a top in employment. The future does look quite uncertain. Currently, the autumn statement, as we have a new government, it's an opportunity to make a success out of Brexit, as Prime Minister Theresa May said, but it might be missed, okay? Because what would be a success? Because it's a new government, they're unshackled. They don't have to use the chains of the austerity policy that George Osborne enacted, the previous chancellor, and they can provide some kind of fiscal stimulus, some kind of investment, to show that Britain can stand on its own as it's about to leave the European Union. But as we've heard from weekend interviews by Philip Hammond, they'll probably make only very little changes in this autumn statement, this mini budget, and I believe we'll have, well, this autumn statement might move markets in terms of new forecasts, but we won't have earth-shattering comments. Okay, this might weaken the pound. Regarding Brexit, this is a picture of Prime Minister Theresa May. One of the reasons that the pound is strengthened is that a few weeks ago we had Super Thursday in the UK. The High Court decided that Parliament must rule on Article 50. Only the UK Parliament can officially approve the exit out of the European Union, not the government on its own. With its royal prerogative, the government immediately appealed to the Supreme Court, which will hear the case in December. Parliament will probably approve Brexit because even if members of Parliament lean towards remain, do not want to leave, they will probably respect the will of the people, especially those in constituencies that voted to leave. So Article 50 is still planned to be triggered in March. That means a 2-year period that will end in March 2019, and then the UK will be out, and that will leave around 2 years for negotiations. The best deal for markets is a Norway-style deal, also known as soft Brexit. Okay, a deal in which basically immigration remains free, and also the UK has access to the single market. Basically, the same situation as we have now without official membership. That's what Norway has. But Prime Minister Theresa May leans towards limiting immigration, and some of her cabinet members want to allow for foregoing the single market, and they want a hard Brexit. There's huge uncertainty about that, and it seems, according to various reports, that the government does not have a clear plan about it. Okay, so all this uncertainty weighs on the pound. However, well, there's also uncertainty on the other side of the globe. Trump, also there, he wants to enact fiscal stimulus, which would lift the US growth prospects, and also lift global growth, right? More demand from the United States. But going against trade, breaking trade deals or things like that could hurt the world could hurt global growth. Some hope for a quick US-UK deal, okay, because the UK needs fresh trading partners, and well, also the US wants, I guess, not to break, wants bilateral deals. That's what Trump said. But in the week, pound dollar could, of course, benefit British exports to the United States, but still, most of the trade is with Europe. What makes the pound dollar more stable than, for instance, euro pound or things like that, is not so much. There's not so much monetary policy divergence. Okay, so if the Bank of Japan is easing, if the European Central Bank is about to add more QE, probably, okay. In the UK, the Bank of England moved to a neutral stance. They moved because of the weakening of the exchange rate, because of higher inflation. There's not so much divergence. It's they changed also on that Super Thursday from from dovish to neutral, not expecting to cut rates, not to raise them either, watching the exchange rate, among other things. So the Bank of England is neutral. That's what keeps pound dollar more stable. Remember that the pound fell already a lot following Brexit. Then we had a second round of falls in October, and but it didn't react quite badly to the U.S. elections. Okay, of course we had high volatility, but nothing extraordinary. So if we compare both countries, the Fed is set to raise rates. The Fed is hawkish, and the Bank of England is neutral, not dovish, at least in 2016. In 2017, of course, huge uncertainty regarding Trump's policies and huge uncertainty regarding the Brexit negotiations. Okay. Let's conclude this this part with the charts. Well, the pound dollar chart. Repeat for those watching the video. Currently, pound dollar. This is the big fall. This is the Brexit fall from almost 150 to a range between 128 and 135 that lasted for quite some time. This range is not relevant anymore. Then we had another fall. We had this flash crash right here. What was the exact date? Let me get that for you. That was October 7th. And then we had the pair stabilizing. So the levels to watch here on the very top side, the first post-Brexit low, 127.90, 127, 125.50, 125.10, 123.80, 123, 121.70, 121, and 120, of course, is a round number.